Did you know that for many stock plan transactions, companies have just one day to deposit the tax withholding with the IRS? That is not a lot of time. You might be wondering how any company manages to comply with it. In this video, I'm going to answer that question with some highlights from our recent Pulse survey on tax reporting. This survey is part of the Equity Compensation Outlook, a collaboration between the NASPP and Fidelity Investments. Well, one way that most companies deposit their taxes on time for their stock plan transactions is by using a special payroll transmission. You can see that almost a half of companies always use a special payroll transmission to deposit taxes for their stock plan transactions. Another 40% use a special payroll transmission only when necessary. Usually that's going to be when the amounts that have been withheld trigger the next day deposit rule. Speaking of the next day deposit rule, I'm pleased to see that survey respondents report that they are, for the most part, able to comply with this requirement. You can see that overwhelmingly, for both full value and for stock options, companies report that they are depositing the correct amount of taxes on time, even when this rule is triggered. Only about a quarter of companies are forced into a situation where they have to deposit an estimate of the taxes, mostly in the case of full value awards. And really, very few companies report that they sometimes have to remit the taxes late. Now, at the federal level, it's pretty straightforward to determine your tax withholding rates. You only have 3 rates to worry about. You're using usually the flat supplemental rate, and then, of course, Social Security and Medicare. But when it gets to other jurisdictions like states, cities, and counties, things get a little bit trickier. There are a lot more of those jurisdictions to worry about, and not all of them have a flat rate. So in the survey, we asked how companies source the withholding rates for all of these various jurisdictions. At the state level, you can see that over half of stock plan administration teams are relying on payroll for this, either their internal payroll teams or in some cases just going straight to their external payroll provider. Another almost quarter of companies rely on another provider. That might be their stock plan administrator, or it might be an accounting or a consulting firm. And then 17% are looking the rates up on a website somewhere, which that seems easy enough. For city and county taxes, we see even more reliance on payroll. Almost 3/4 of companies are sourcing these rates through either their internal or their external payroll provider. Only 11% use any other provider. And here we see some non-compliance. 14% of companies report that they are just not withholding city and county taxes on stock plan transactions. In some cases for those companies, though, their payroll teams may be collecting those taxes through regular wages after the transaction is complete. Now, with T+1 on the horizon, we were really curious to know how long it takes companies to calculate the tax withholding due on equity plan transactions. And I'm pleased to report that actually, in many cases, companies are calculating these taxes in 1 day or less. In fact, for U.S. employees, over 90% of companies report that they only need a day or less to do the tax calculations. But you can see that as the tax situation of the award holder gets more complex, companies sometimes need a little bit more time for the tax calculations. And lastly, I want to highlight the top 3 tax compliance challenges that survey respondents reported to us. Now, we asked about these challenges separately for U.S. employees versus employees outside the U.S., but it turns out it doesn't matter where the employee is located. The challenges are all the same. And those challenges are mobile employees, coordination with internal stakeholders, and employee education. So those are the highlights that I wanted to present to you from the survey. I really barely touched on the full scope of data that we collected in this survey. If you're interested in learning more about tax compliance, such as how companies manage tax reporting or how they educate their employees on tax consequences, we will include some links in the show notes to some additional resources. We'll also include a link to the full survey. It's still open for participation, and if you participate, you get access to the full survey results. And again, this survey is part of the Equity Compensation Outlook, which is a collaboration between the NASPP and Fidelity Investments. I hope you enjoyed my survey. If you did, please subscribe to our YouTube channel. Then you're notified when we post new videos, and it also really helps us out. Win-win. Thanks for watching.